Good morning, small players. Welcome to another day of live charting where we go over our pre-market gapper scanner, determine levels of support and resistance that we'll use for trades the entire day. So we have students that trade in the pre-market trading session because it works for their schedule. However, it's not necessary to trade pre-market to be a successful trader. So if you do see us taking trades in the pre-market trading session, and if this is not something you're comfortable with or can do with your schedule, don't think that it's a necessity. It's just something that we do because we get up early to do the charting, and if we see an opportunity, we grab it. It's really important to get up early in the morning and prepare for the trading day. You can't just sit down on your computer and expect that you can start trading at 9:30 and know exactly where to enter and where to exit. You need to spend some time researching, just doing the basics. The number one thing that we do is we run our scanner, the pre-market scanner, that gives us the gappers for the day. These are the stocks that we'll be focusing on. When the bell rings, we have a second scanner which looks for momentum stocks, and a lot of times there's going to be a stock that for whatever reason gets some attention during after bell. That's not a part of this list. But for the most part, the biggest runners of the day are we're going to be able to prepare for before the day starts, before the bell rings. These are stocks that most of the time have gotten news overnight, and that's what's causing this increased buying and causing them to gap up. If you're new, gapping up just means that the stock is set out to open higher than what it closed. So this stock closed yesterday at $2.40, and it's right now at $3.40. At one point this morning, it was at $3.80, so it gapped up 58%. So those are the stocks that we trade. And again, a lot of times, we've mentioned this in one of the other charting sessions, a lot of times beginner traders will say, well, this has already gone up 58%. Why do you think it would go up more? Why would there be a trading opportunity here? And the reality is, this gap is normally caused by some institutional buying. This is the secondary buying is when retail traders get in, traders like us. But even institutions, the original gap up, this is just algorithm trading that, scans news and buys as soon as a new piece of news is dropped. And, once we can start trading, there's more interest because we are we know there's a good piece of news and we want to get in on the action. People that don't even trade the pre-market session. So if you're just a regular investor and you call up your broker that you want to invest in this company because you heard about the news, you're going to wait until bell to do so, right? So plenty of opportunities. There's no limit as to how high a stock can go. So never fall into the trap of thinking, well, it's already gone up this much. How far can it go? The answer is to infinity. There's no limit as to how high it can go. And the other thing is we focus on low floaters. It's so easy for them to squeeze, so easy for them to move. So don't fall into the trap of thinking that the move is gone. As long as there is momentum, as long as there is increased volume, there's going to be opportunities. And then the second part of that is knowing that you don't need a stock to go to infinity to make money. This stock could trade all day between $3.46 and $3.84. It can do this all day long, and you can make money. So for example, that move is a 12% move. You can make 100% trading that same move if you trade it every time. If you trade short, you trade long, you could easily make a lot more than the move is if you trade the channel, especially if you can trade both the long and the short side. So all that's why we are doing these. That's what we're looking for, these levels, because that's what we need to determine the trades that we can take. Okay, so this one just broke a 5-minute flag. Granted, it broke it here. So this was really the flag, right? It broke the flag, sharp rejection. So we know short sellers are here at 346. So right away, I know that I am very interested in this on break above 364 because I know that that's where short sellers are going to start getting squeezed, right? And for 364, 365, whatever, where they entered and gave us a sharp rejection, a clear stop loss for them is this 374, this rejection here. So if we can get them from here to here and we break above 375, they're going to squeeze to high of day. Other short sellers are going to have a stop loss above a high of day. And then some even more aggressive ones above 4. So we know where their stop losses are because they trade the same way that we do. They use support and resistance lines. They just do it the opposite way. They open their position on resistance, they close it on support. We open it on support, close it on resistance because we buy to open, sell to close. They sell to open, buy to close. That's all it is. So anyway, so we know where they are. We're trying to form another flag break. Well, we broke another flag here. It didn't really happen for us. So it seems that short sellers are really strong. And when a stock shows us that a couple times, we can decide, listen, for me, I think a safer trade is just to wait for their squeeze level. Wait until we break above 365 until we enter a position. Someone more aggressive could enter here because it just did a VWAP bounce. So, we were below VWAP, we broke above VWAP, we touched VWAP, we bounced on VWAP. So we're showing VWAP as support, that's an entry. But then, we didn't really have volume, not enough buyers came in on that VWAP bounce. So we failed, we dropped below VWAP again, but then the volume came in. This is what we call a volume confirmation. So the volume tripled when the stock touched VWAP. So we know that there's a lot of buyers that were waiting for that move. So we know buyers are watching now. So we can say, okay, this is the confirmation that I need. I'm just going to enter now in VWAP. I'm going to keep my stop loss below the low of this pullback. So 347 is going to be my stop loss. Granted, if you're trading pre-market, there's no stop loss, but you know where your risk level is, where you get out for a loss if it doesn't work out the way you want it. And I can say I'm going to trade a VWAP bounce. 365 is going to be my first profit taking because I know that's a very important level. That's where short sellers are. And when you know that's your profit level, you don't wait until the level to take profit because by the time it gets there, short sellers are going to attack it and you're not going to get a fill. We normally try and take profit 2 cents before. So 363 is where you place your profit and you wait. If that gets rejected, a lot of times I will just say, okay, I'm just going to take the rest of my profit out and wait for another trade. If it drops to VWAP again, I can trade the same trade again, right? Or if it doesn't quite drop to VWAP, consolidate somewhere here, and then decides to go back and test it again and breaks above it, I can trade the breakout. But, I don't need to give money back or lose profit if I see that we don't have enough buyers to help us break this. And we know the more these levels get tested, the weaker they are. So the more we challenge the short sellers here, so we've had one rejection there, second rejection, the more we challenge it, the less there are waiting there and the more opportunity we have to break above it. However, we also know in the trading world, third rejections are very big. So you don't want to get stuck in a third rejection if short sellers attack it. So we try and just take our capital off the table and wait for another trade. The next stock is BBIG. We've been trading this so much. If you guys have been watching the live stream, it's constantly on scanner. Actually, wait, there's this here that I want to touch. So we're going to do the levels here too. A lot of times beginners will message me and be like, oh, can you check my chart and make sure that my support and resistance levels are correct? And the truth is there's really not correct, wrong way of doing it. As long as there's 2 candles that are touching a level, that's a level. So all you need for support and resistance is just 2 candles touching, right? But there could be 2 candles touching a lot of levels. So what we try and do is just map out the most obvious levels, and then what helps to determine which levels are stronger than others is situations like this one here when we saw the sharp rejection. So we know this level is huge, right? So as you're trading, as you're watching, you will notice which levels are big. So here, obviously, this is the biggest level that we can see, 7-7, because we have this sharp rejection. So we had a flag here, right? A lot of times, I love trading breakouts, but something to be aware of if you're a long bias trader is short sellers also love shorting breakouts. if there's not enough buyers that come in, there's not enough volume, they will come and slam it down. So this was a 5-minute flag breakout. As we broke out, short sellers came in on 770, slammed it down to this level of support, covered. Maybe some buyers entered, and they're covering. We have VWAP, profit taking from buyers. Again, more buyers coming in. We broke above this level, this key level of 750. We had a short squeeze. Once we broke above this level where they've shorted before, we got an even bigger squeeze, but we weren't able to break above 775, so we weren't able to get to high of day. So these are the levels, and then we see here short sellers really defended 775, slammed it back down all the way to 71, which is a level of support because of this candle here. When we had a sharp rejection, this was resistance. Once we came down to test it, it became support. First test of support is the strongest. So this is that trade from here to the level of resistance, level to level trade, the way we trade. Second test of support is weaker than the first. Still able to do a level to level trade even to VWAP. The third time the stock tests this, I wouldn't open a long position because it's a third test of the same level. So there's not going to be enough buyers there. And that's normally a short setup. A third test of support is normally where short sellers come in. And you can have some fake, buying, some traders trying to get in, but most of the time, third levels of support, you have a sharp rejection down. There are obviously exceptions because we can predict the future in trading. All we do is analyze past data and make expectations about the future. So there are situations when, especially if a stock is the most obvious, hottest stock of the day, there are situations when there's going to be enough buyers even on a third bounce of support, and it's going to go and it's not going to crash until the fourth. But as a general rule, because of everything I've seen, I think there's more probability that it will crash on third level of support than not. So I just avoid those trades. And if I miss a run every now and then when it doesn't crash, I'm okay with that because all we do in trading is try and determine probabilities and most importantly, try and determine the safest trade we can take. So we're forming another 5-minute flag here. I think the most obvious trade here is obviously break above 775 for a short squeeze towards high of day, but there's also multiple other trades that can be taken. VWAP bounce and this flag break as well. This one's below all indicators, so I'm not interested in it at the moment, but because it has a lot of volume for the day, we're going to just chart it out and set up an alert for when it goes above VWAP, if it ever does, so we don't forget about it and we can see if it provides a trading opportunity. Otherwise, not interested. So I'm going to do create alert. Okay, so if we break above VWAP, I will, well, it's really not 580. Let's see here. Come on. Okay, that's that. ATR, another stock that we've been trading a lot. Actually traded a VWAP bounce this morning. Very obvious levels, of course. So 13.6, there's so many rejections there. 13.4, there's rejections here, there's bounces, so a clear level. Those are really the main levels I would chart out, but I can put these two as well, even though if it goes below EMA, I really won't be interested, but I'll chart them out. So again, those are the levels for our level to level trades. And this one, it's below all indicators, nothing fun here, but if it breaks above this level of 425, I'd be interested. I mean, even potentially break above VWAP, we can create an alert. And that's it. These don't have a lot of volume, even though this one, SEEL, is a stock that's frequently traded in the small cap world. It's a name that traders will recognize, so maybe they'll pay attention to it, so we can chart it out quickly. And then the ones that can provide the most immediate opportunities I put here on my watch list, so that we talk about this often in trading. When the bell rings, it's so quick. You really have 30 minutes for the biggest opportunities between 9:30 and 10. There's some increased volatility still until 10:30. After 10:30, the market slows down. There is less volume. Less volume means less volatility, and less volatility means with less opportunities. You can still trade all throughout the day, but the largest insane moves most of the time really only happen in the first hour in the morning. Again, just like anything else, there's exceptions to that rule. It's trading, it's not predictable, there's many things that can happen, but when you think about the first 30 minutes of the morning, that's not a lot of time. So once this scanner opens up after the bell rings, there's going to be 10s, 20s, 30 stocks there. So you can't constantly run through all of them. It's a waste of time, just even the seconds that you lose opening the chart. So the ones that have the most immediate opportunities, you put on your watch list here, so you can quickly run through them and see which one could be opening up for a trade for you. And the reason why I'm showing you this is because a lot of beginners, when they first start trading, are only trading on one screen, and they have this misconception that they need multiple screens to be successful, and they don't have the money to spend on such a big investment, especially when they're still learning and they don't even know if trading is going to be what they want to do. You don't need multiple screens to be successful. You just need to manage your time efficiently, because when you have one screen, you have limited places where your eyes can go and look for trades. So you can try and set it up so that you can take them as they occur. And then this is something that we also always obviously check. That's why I always have the news here, but I don't think I've spoken about it in great length in these morning sessions. So maybe tomorrow we'll talk more about the news and how we make sure they're legit and there's a reason behind the move, so we don't get stuck in a hold for new spending or a request for more information. That's it for this morning, guys. Please be sure to join the chat room, even if it's just the free one. Is the fastest way to get to us and ask questions. The link for the chat room is in the description below. You can just come in, talk to other traders, talk to us, ask any questions about trading that you may have, and also participate in the free membership competition that could allow you to get 1 free week of trading with us and seeing how we do this real time and learning with us. That's it for today. I will see you guys tomorrow. Have a happy Monday and happy trading.